It is so crazy to think about what the central banks around the planet are doing. They are dropping their interest rates. It used to be ZIRP, zero interest rate policy, but now it's NIRP, negative interest rate policies. They're literally making their interest rates negative, and 27% of the world's GDP is now living under a negative interest rate policy. And we're not talking like the Central African Republic. We're talking countries like Sweden and Denmark and Switzerland and the entire Eurozone and Japan. Very huge, well-developed, I want to say well-functioning. In many ways, they're very functioning. But they have really, really, really painted themselves into a corner. And all that's left is to just keep lowering interest rates and keep printing money. And in fact, that is what's happening. Obviously, it cannot go on forever. There will be a point in time where we just say no more. And I don't know what that is. It's always farther away than we could ever imagine. Japan has been lowering rates very fast, has been printing money, and has been not fixing any of their problems since 1990. So they're 26, 27 years into not having to fix their structural problems. And here they are still. So it's pretty impressive how long we can go. Though as more countries have jumped in, all of Euroland, the United States, China, the UK, that's for all the UK listeners who don't believe they're part of Europe, this whole experiment is accelerating. And there is one thing that is going to fix it all, and it's the same thing that fixed it the last few times we were in this situation. And that's what I want to talk with you about. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend, the theme for episode 327 is this idea of peak gold, right? We've got these two countries, and they're equally powerful in very different ways. But we have on one side China, and on the other side the United States. And really what makes them powerful is, yes, their size, yes, their military, but really what makes them powerful is how much gold they own. And every central banker knows this on the planet, that if you don't have a lot of gold, you're just not respected. Now, we don't actually know how much gold most of the central banks around the planet have. We just have to kind of believe what they tell us, right? And the central banks are, well, at least in the United States, is not a government entity. In other countries, it is a government entity. But they can't really tell you what they're doing, because if they did, it would really influence the price of that thing they're buying, gold. So I have thought this for years, that China is going to come out one day and announce, oh, by the way, we have 8,000 tons of gold reserves, or 9,000 or 10,000 tons of gold reserves. Now, officially, they have only a couple thousand, but they will come out. And the reason why the theme's kind of this thing called peak gold is there's going to be this lightning flash, this moment on this planet where the only thing that can really fix all of the bad decisions that the central banks have made is gold. And gold fixed things in the past, and it has a very long history of fixing the bad choices of central bankers and central banks, and it will do it again. And so I pulled up this, I found this great cartoon. The U.S. is throwing their gold over, and really it should be maybe the U.S. and the rest of the world. Switzerland's exporting a lot of gold. The UK is exporting a lot of gold. Europe is exporting a lot of gold to China. China's importing as much gold as they possibly can import right now. So this idea of peak gold, gold's not going to go away. Unlike peak oil, peak gold just gets put in really expensive rooms with thick walls and doors with combinations, right? They get put into vaults. It gets put into vaults. So gold does not get used up. But there's going to be this inflection point where the demand for gold is going to greatly outstrip the supply for gold. And the only way the demand and the supply are going to get equal is one of two ways. A new source of gold being created. So if there's some sort of horizontal mining or hydraulic mining, pulling those two terms from the energy industry, that can somehow find all this extra gold, I guess it's a possibility. There's nothing like it out there right now. Remember, hydraulic fracturing was around in the 50s, or certainly started to be created in the 50s. There's nothing like that for mining today. And the other thing that could happen is the price of gold has to go up to meet the supply that's there. So I don't know what that's going to be. Right now, gold being under $1,300, we could see gold at $2,600 or $5,400 or $10,800. I'm just doubling the price, guys. But it's going to go to a place that can stabilize the balance sheets of at least the two largest economies on the planet. So what I want to show you here, and why I think there is peak gold happening right now, is this is a price chart of mining. Now this price chart goes back to 2005. And this is how many ounces, how many tons of gold, metric tons of gold are mined each year. Now the problem with this is there's this country called China. They keep all of their gold that they mine. They keep all of it, and they're importing, depending on which research you're doing and how you're researching, anywhere between 800 tons to 1,000 metric tons extra a year. That's on top of the 600 tons they mine themselves. So the red line is just showing you, especially with the 2015, is just taking 3,000 tons, minusing the 600 tons that China has mined, which they're keeping, which I believe are going right to their central bank, in addition to all the tons that are getting imported, that we actually have hit this peak mining. Yes, mining production will increase around the world, especially as the price of gold increases. I mean, an ounce of gold at $5,000 an ounce makes a lot of gold more accessible, more economical to get, but not at, having it be under $1,300. So we've got this peak mine production going, and China's not really exporting any gold, and they're importing an amazing amount of gold, anywhere between, again, 700 to 1,000 tons a year, and increasing. So we're having this idea where, this one country, they want to keep hoarding the gold because they want to be on an even foot with Europe and Japan and the US with their currency. And the way you do that on this planet is by having an incredible amount of gold. So something's going to have to shift. Now, look, this is just not a theory of, well, maybe China's doing this and maybe they're doing that or maybe they're not. So I looked to the price charts, and I just want to point out a couple price charts. Gold has had a very bad 4 years. Depending on how you're measuring it, if you measure it from September of 2011, where it peaked at $1,919 an ounce intraday, and if you measure that, it goes 1, 2, 3, 4, about 4.5 years since it's peaked. Or if you go from the closing of the year, so did it close higher at the last trading day of the year than what it started? We've only been in 3-year gold bear market. But what you're looking at on the screen here is the actual price of gold, and it was in that downward trending channel right here, and it broke out above it. And not only did it break out above it, but now it is sitting on top of that line that used to resist it. Here it supported it up here, then it resisted anything, and now gold has broken out above and is sitting on top of it and looking like it wants to move higher. So gold itself is telling us something has changed after 3 years in a bear market, or if you want, 4.5 years in a bear market. But that's not just all. What you also want to see when gold has bottomed and is starting to move up back into a cyclical, or back into its secular bull market, long-term bull market, is you want to see the small cap mining stocks start to move faster than the large cap mining stocks. And if you look at the blue line, that is a downward trending line. And when this line goes higher, the gray line, when the gray line moves higher, that means the small cap mining stocks are moving up faster than the large cap mining stocks. And in fact, that's what they're doing now, and they have broken above the downward trend line. Now, yes, it happened back here in 2014. So of course, we're going to be watching this to see if it's different this time, or in fact, it's going to move back down. But if you go back to this previous chart, back to 2014, you also saw gold did not actually break out. It was still in its downtrend. And then the other thing I want to show you is just how mining companies or mining shares themselves being compared to the metal itself has broken out to the upside. So when this gray line moves higher, that means the mining share price is moving higher faster than the price of the metal. And again, it's happened in the past, but this time it's broken above that downward trending line. So we've got mining moving up faster than the metal. We have small cap mining moving up faster than large cap mining. And what we have is gold breaking out. Now there's some resistance, and if in fact this is the bottom, and the longer these three price charts stay above that downward trending blue line, the more likely that in fact gold has bottomed and is moving to the upside. And there's many other signals that are outside this weekend podcast, which I will get to and I will show you in a training webinar that is going to happen on April 21st called Peak Gold. So anyone who has gold or who is interested in gold or has thought about buying gold, the training I call Peak Gold is going to explain everything. And the last time I ran a gold training webinar was to the month 3 years ago. So now, what is the takeaway? So the takeaway is a couple things. I think gold's going to save the planet. Yes, I know a lot of people think that's a ridiculous thing. No, central banks will save the planet. But in fact, central banks kind of mess things up. But gold's going to save the planet. And the way it's going to do it is it's going to stabilize the currencies, just like it stabilized the currencies many cycles in the past. It's going to stabilize the currencies. It's also going to end currency wars, because what's going to happen is the people on this planet, the investors on this planet, are not going to allow this just silly money printing going on by all these countries around the world. And they're going to demand that, in fact, you have gold behind that. And it just so happens, when it gets revealed, the US and China will have the most gold on the planet, and they will be able to stabilize their currencies first. And then all other currencies will fall in behind it. And then lastly, it's going to end this negative interest rate policy and this zero interest rate policy. And look, this is not going to happen without some huge disruption in the stock market. Yes, money printing is going to help the stock market move higher, especially if it increases. But what's really, really going to help the stock market over a long period of time is simply to allow the stock market to just move down to its natural price. Let the price mechanism, price discovery mechanism of the stock market actually work, which means we have to step away from this NERP and ZERP and money printing. And the stock market will figure out the proper price. We'll do a cleansing. We probably will have a recession, and we'll clean this all up, get it behind us, and move forward. So if you find yourself curious or interested about gold, or wanting to own gold, or you have gold and you don't know what to do with it, or if you should get more or get less, or sell your gold and buy your silver, or sell your silver and buy your mining, or sell your mining and buy small cap mining, then the training Peak Gold coming up on the 21st of April is going to answer all those questions for you. And if you go back to the email that you got that got you to this episode, you'll see in the PS, the postscript of that email, there is a link that will take you to the GoToWebinar sign-up page, so you can get access and RSVP for that, which you're going to want to do, because there is limited seating on GoToWebinar. So thanks, everybody. This is just another step in helping you protect your future and protect your portfolio. Until next time, this is RC Peck.